In this video, we're going to discuss a short trade, and stick with me to the very end and I'll show you where to get exact short trade entry prices every morning before 7 a.m. Let's scroll down here real quick to S&P 500 futures. These are one of the most liquid futures contracts you can trade, and one of great contracts to trade. If you take a look here, this offers you buy and short prices every day before 7 a.m. These are 1, 2, 5, 10, and 20-day holds. That basically means if you bought it today, you'd close it out by the end of the trading day the next day, and so forth for each one of these. Again, bought it today here, sold it short at $40.79, $40.79. You would close it out worst case 10 trading days later at the end of the trading day, or take a profit. So you either take a profit or close it out worst case in 1, 2, 5, 10, or 20 days, depending on where you enter. So if we take a look at these short trades, there's no short trade here on the one-day hold for S&P today, but there's a two-day hold, and you can see 4,079 would be the short. If it hit that price, you would short it. Now, selling something short sounds like a big deal, but it's actually extremely simple. If you take a position, take the situation where you have no open position, you can sell short just by simply going in, and instead of hitting the buy button on the instruments you want to trade, you just hit the sell. And that will put you in a short position. It's short is simply selling something you don't own. And then to close the trade out, you buy it. So if you sold it short at 4,079 and it went to 4,000, say 75, you could close it out at a 4-point profit. So that's basically shorting. All shorting is. When you're talking about futures, here we have S&P 500 crude, gold futures, treasury bonds. Shorting is as simple and as easy and as less problematic as buying. Shorts go down faster than markets usually go up. So shorting is a great way to trade. You just have to learn it. You have to wrap your head around it. And you have to trade the right instruments. If we go back up to the top here, you'll see the stocks that are listed here. We list 190 stocks on our website. I think there's about 12 listed here. You'll notice we list buys only for stocks. And that's for a very specific reason. You can get into enormous problems shorting stocks. You do not have the same type of structure with a stock that you do with a futures contract or a currency. I'm going to show you the currencies in a minute. And you can get into a lot of problems and a lot of manipulations shorting stocks. So I don't make recommendations, but if I was going to short a stock, I would do it by buying a put option. I wouldn't necessarily go in there and take a naked short on a stock. There's always exceptions to that, and especially if you're sophisticated, it might be better to short the stock. But if you want to trade stocks in short positions, I recommend I recommend for me personally, I would buy put options. I think it's a lot safer way to do it. But let's go down here and take a look at cash forex. This is simply the interbank cash forex market pricing. This pricing is all for a specific day. This is for let's see, I think this is for Friday the 27th. So these are all expired, and each of these prices you see are good only for the day they're issued. They expire at the end of the day. But if we go down to the forex prices, you can see if we take this currency pair here, the euro versus the US dollar, same thing. You can short these on the interbank market through your broker just exactly like you would buy them. You if you enter the market as a flat position, instead of buying, you would just sell it at this price here for the one-day hold and so forth down the line. If the price went down, you'd cover it at a profit. If it went up, obviously, and you had to close it out, you would lose money if it went up. But the concept of shorting is the same as with the futures, and it's a very, very simple thing to do for both the futures and the currencies. I believe personally, if you're not shorting, you're missing out on an enormous benefit, because again, the main benefit of short-term trading, selling short in a short-term trade, is the market goes down a lot faster than it goes up. So you can make a ton of money quick if you learn to short. If you take a look at these prices, we cover the major currency pairs. We cover the 4 most liquid treasury futures. We may one day put on here the 10-year bond, but this is the 30-year bond. The 10-year bond is a much more liquid contract, but it's not nearly as volatile. If you'd like to get these before 7 a.m. every day, Monday through Friday, at no cost with no credit card, you can go to our website, rbamresearch.com. We cover 190 stocks, the major forex pairs, crypto, and the most liquid futures contracts. Again, no credit card, updated every morning by 7 a.m. and those are free at rbamresearch.com. You just go and register. If you like this video, click the like button below. If you'd like to subscribe, please do that. And remember, every single thing on here is for your entertainment purposes only, including the entry prices. You definitely trade at your own risk.